Hello and good evening, everyone, to the Web3 and Crypto Basics Trading Bootcamp. This is our final session. We launched in July, and congratulations to all of the students. I see many of you that have been turning up every single week, so give yourself a pat on the back because that shows dedication to upskilling and learning this new and exciting world of crypto and Web3. We've come together in partnership with EvolvH3R, a Crypto Queen, all things blockchain and insightful to bring you this free educational program. If you have found your way to this session tonight or found this recording after the live session and you want to get access to all of the recordings, which we will be creating to on-demand short courses, you can go ahead and sign up to scan that QR code or join with the link below. So tonight we're going to be talking about dollar cost averaging, the right mindset for investing, and what are some of the next steps for your growth in the Web3 ecosystem. So if you have missed any of the recordings, as I just mentioned, you can join the Education Hub. We are going to be continuously building this out. We have some other educational programs that we'll be building out there in October and November. So please go ahead, join the group, and stay tuned for some more short courses coming your way. So a little warning for anybody that is new to this and is just coming across this recording. If you're new to crypto and Web3, it is going to be information overload. We call it the crypto or Web3 rabbit hole. There's a lot of information to learn. Even in these short courses, we just go over the high level. We provide you with learning activities so that you can go and further your learnings. So it is an interactive program. You can ask questions in the group. You can participate. And as always, please be careful about scammers. They are getting more and more sophisticated with the way that they are scamming people. So always be wary of links that you join, people that send you messages on Telegram. Just always be very careful out there, especially with AI now and deep fakes. You got to be very, very careful. So how can you get the most out of this session? Turn off distractions, take notes, ask questions. Please, if you have a question, feel free, pop it in the chat. I will take them as we go along. Just be open to learning and engage. So before we jump into the lesson, as always, we run lots of different events across our communities. So all things blockchain, we will be at Token 49. Our next event in Brisbane and Queensland is a hybrid event. So we do live streams, so you can tune into those. And then we also have our next online AMA with Granton, with Deb, who specializes in helping Web3 startups. And that will be on October 14th. You can subscribe to our Luma calendar to keep up to date with the different events that we have coming up. She Connects, and well, I say She Connects, our She Connects series is going to Token 49. We're also hosting a rooftop yoga, and we also will be at the Australian Crypto Convention for those of you that will be here and attending in Australia. I know that there's plenty of you tuning in globally. So quick little disclaimer before we jump into it. This is for educational purposes only. We're not providing financial advice, especially tonight. I'm going to give you some recommendations on, how you could dollar cost average. Doesn't necessarily mean that we are recommending that you do that. You need to do your own research and figure out what is the right investment style for yourself. And all of our sessions are recorded. So we have been playing a game, and there are some prizes up for grabs. I'll talk a little bit about that. I'm going to be sending out an email of when we're going to be announcing the winners. So we'll be giving everybody this week and maybe next week. And by the end of next week, we'll be announcing the winners. How do you win? Completing your weekly quizzes, the feedback form. I'll be also including that in the email so that we can get your feedback on how we can make improvements, and interacting inside of the Education Hub. So we'll take a look at the end. We'll jump into the group and take a look at the leaderboard and see who's leading the way. But we got some VIP merch boxes by Bybit and some USDT up for grabs. And then we also have some Australian crypto convention. And for those of you that are in Australia, for anybody that is overseas and wins and would like to go to Miami, we also have some tickets for our students for the Blockchain Futurist conference that's happening in Miami in November. And we will be launching our EvolvH3R mentorship program. More information will be coming in about that when we'll be doing the next cohort. We're just looking at locking in one of our first scholarship sponsors, but you will also get a seat at one of those as well. All right, let's talk about dollar cost averaging and the right investment mindset. Just out of curiosity, if you just put into the chat, is anybody currently dollar cost averaging in or out of the market? You can just give me a Y for yes, N for no, or I have no idea what dollar cost averaging is. All right, a few of you, that's very good. You have a plan for dollar cost averaging out. That's fantastic. It's very, very good to always have, your exit strategy, have your plan, so that when you're going to take profits, you can never go broke taking profits. All right, so what is dollar cost averaging, which we will, the acronym is DCA. So before we break it down, let's look at some of the common strategies for investing. So active trading, and for those of you that have been following along with the boot camp, you've been tuning in on Wednesday nights with Renee, who is a trader, and she's been talking to you about some of the different types of styles. There's daily trading, there's swing trading, which is kind of over long periods of time, sniper, which is like kind of really quick and fast, and then automated. So for example, Finsightful, who's one of our education partners, they have like an automated trading system that they use, lots of different types of traders and automated bots, etc. I personally don't trade. I'm a hodler, or I'm a lump sum and kind of buy, or I dollar cost average in. Really kind of depends, a few different variables, and we'll kind of break those down today. But for me personally, it kind of depends on the market, depends on my cash flow, on when I'm dollar cost averaging, and sometimes when I'm just kind of buying and holding. And then dollar cost averaging, which I'm missing the A in my abbreviation there. All right, active trading. Although we have been going through and teaching about active trading, I always like to tell people it is extremely risky. This is why we always recommend that you start with the demo trading. 90% of people are unprofitable and they lose money. So be very, very careful if you are going down the route of daily trading. And it can be very time consuming and stressful for some people. So it really kind of depends on how much time you have to invest in learning and educating yourself. Renee's probably been telling you she's been learning for years on how to master trading. But a lot of fear and greed, a lot of influencers, a lot of exchanges. They want people to be trading daily because that's how they make their money. They either make their money through affiliate programs, which there's nothing wrong with making money through affiliate programs, but the exchanges also make money off of transaction fees. So a lot of the times they're making trading seem easier than it is and more profitable than it is because they're trying to make money. I actually sometimes get ahead of myself in my steps. So just be prepared if you do want to learn how to trade. And I know a lot of successful traders, so I'm not trying to scare you out of becoming a day trader. Just know that it takes time and you have to invest in your education on how you're going to become a profitable trader. It's not as easy as some of them make it look. Okay, lump sum, buy and hold. Probably one of the easiest and most hassle-free strategies. And in an ideal situation, if you were to do it at the very bottom of the market, you would make a huge amount of profit and then you could sell at the top. But that is very hard to predict the bottom of the market and the top of the market. And a lot of the times, we use the saying when retail comes in, they actually buy at the top of the market, this big, huge sum, and then the market drops, and either they end up selling, or you can hold it and ride the wave for the next cycle. But most beginners invest more than they can afford to lose. They buy at the top of the bull run, then they have significant losses, and then they think that crypto is a scam. It's not. It's like stocks. If you were to buy, some of the top tech stocks, they can crash and be just as volatile sometimes as the crypto market. So this is why dollar cost averaging is one of my kind of favorite ways, especially to teach beginners how to get started. And I one time had a student when I said, hey, just whatever you can afford, like even if it's just like $20 a week or $100 a week, whatever's in your budget, just to keep buying a little bit of Bitcoin every single week. And they thought that it was too little to actually have an impact. But we're going to go through a calculator that's going to kind of show you that if you would have started to kind of dollar cost average in the different types of profit gains that you can make. And we'll get to that shortly. So dollar cost averaging is when you take an amount of money. It doesn't have to be a small amount, but I recommend definitely for beginners for it to be a small amount on a regular basis over a long period of time rather than taking. So say if you have $500 or $5,000, rather than taking all of that and just purchasing it all at once, you would say do $100 a week or $25 a week. And this kind of aims to reduce the impact of the volatility of the market, because as we know, sometimes crypto can have big moves of 10 to 20 to 30% in just one day. It removes the pressure of trying to time the market. If you don't want to be in there looking at the charts, as Renee probably said to you, if you're a day trader, you need to know, you need to be watching when the market is, you need to be listening to fundamentals. There's a lot that you need to be following if you're going to be trying to time the market. It also helps to avoid fear and FOMO. So the markets and the media are constantly trying to manipulate you with this FOMO. So for me, when I set up my dollar cost averaging, and I've got a good example of one of the other platforms that I use here in Australia, I would just go in and I would set up the ones that I would want to invest in for a period of time, and then I would actually kind of rotate it. So I wouldn't actually kind of really look at the market. I call it noise. I don't even look. I rarely even kind of look at the chart at the market at the moment, because I'm kind of waiting for some of those top signals for me to sell. And then when I feel like I want to start selling, then that's when I'll dollar cost average out. So dollar cost averaging in is you buying, but then you can also dollar cost average to sell. So it really also helps you to build up that tolerance for those volatilities in the cryptocurrency market. And it kind of just can reduce and make it a little bit less risky and stressful. And often, sometimes, depending on the platform that you're using, it really could be a set and forget. And we're going to go through the different types of ways that you can dollar cost average in just a moment. And unlike active trading, you don't need a lot of experience. You just need to make a plan on, okay, how much money can I afford to lose? This is what I'm comfortable. You might even say, hey, instead of, buying my daily coffee, or instead of, going out for dinners, I'm going to set aside that money for actively kind of investing. And as always, we provide some additional links so that you can get those in the slides, and there's some more explanation on what is dollar cost averaging. Oh, I accidentally clicked the link. All right. That's still showing my screen. Okay, perfect. Okay, so some of the best benefits is reduce the risks of timing, poor entries. Unlike crypto trading, active trading, like Renee has been teaching you, it's all about your timing of getting into the market. With this, it's just a set and forget. It reduces that kind of risk of needing to time it. Also doesn't require a big, huge investment up front. A lot of the times people think that they need a lot of money to get started. I actually always recommend for beginners to not start with a big, huge amount, just picking a little bit of the amount that you're comfortable with, get comfortable in there playing, sending different platforms. Even today, I went to go and send a transaction, and then it asked me what chain I wanted to send it in, and then I had to message the person that I was sending it to and say, okay, what chain are you using? So these things kind of take time. So I always recommend, just starting with a little investment to get started. And with a lot of different platforms, you can automate. I'm going to go through one platform here in Australia that you can automate your dollar cost averaging. And in our research activity and your learning activity is actually for those of you that are in different jurisdictions or different regions where you might go and look for an exchange. If you wanted to do a dollar cost averaging that was automated, finding a platform that offers those features and those services. So one way that you can dollar cost average is to do it yourself. Okay. Now the cons are that the fees can be lower than no, sorry, the cons. These are the a wrong way around it. Just notice the pros of doing doing it yourself on some of the platforms, for example, like Bybit, where they do not have the feature that I'm going to show you with the other exchange. I'm going to give you an example of a local exchange here in Australia where they have it so you can set up, it's automated, but their fees are slightly higher than, say, Bybit's fees. The cons are, and just note that those are wrong, the pros and cons. It requires discipline. If you are going to say, okay, I'm going to invest $100 a week and you're going to do it manually, you have to go into the platform every single week. You might forget. No, maybe these are right. Am I? Sorry, I'm having a moment here with my slides. I'm like, these are pros. No, these are just mixed up, these bullet points. This whole slide is just mixed up. So my apologies, everyone. But some of the cons is that you might forget. And if you forget to do that dollar cost averaging, you might miss buying opportunities. I think there's that other bullet point is supposed to be over on cons. That's one. So you can automate with an exchange. So I've included a link here where Bybit has an article on how you can dollar cost average using trading bots with Bybit. Don't ask me about that. I personally don't use trading bots. Renee on Wednesday, she might be able to give you a little bit more insight into that. But as we said earlier, sometimes these fees can be a little bit more expensive when you're using these types of services. But a lot of the times the pros are that it's kind of really easy. You just set it up and it does the trading for you and it's kind of set and forget. And then you can usually modify it at any time. So those are some of the pros. So this is one of the exchanges based here in Australia. So I know that a lot of our students aren't based here in Australia, but for those of you that are based here in Australia, Digital Surge actually gives anybody that signs up free $20. There's no catch. So if you don't have an account with them and you use my referral link, they will deposit $20 into your account. You do not need to deposit. They don't match. They just give you $20 to get started. So I'm sorry for all of the international students. I have yet to come across a international global exchange that will offer this for our students. But this is an example of how easy it is to go into Digital Surge. You can see here where it says reoccurring buying. You can click on that. Now you'll see up here, this was like a screenshot of different coins that I was dollar cost averaging in. The screenshot's quite old, so I'm no longer buying some of these, just full disclosure. But you can easily go and you can set it up. So you'll see how I was buying $15 worth a week. And then I sometimes would turn them off. So I usually would always keep Bitcoin and Ethereum on, and then I would alternate what altcoins I was dollar cost averaging into. And then you can set it up over here so you'll see how often. So you could even set it up. I can't remember on Digital Surge. I think they even have it down to like the minute, the hour. You can do it weekly, you can do it daily. So you can set up how often you want these purchases to come out. Now, the one thing is that you do need to make sure that you have money in your account. So you need to, that is the one thing that you can't automate, is that you have to make sure that you transfer a certain amount of money. So whatever that is, we'll just use $500 as an example. So maybe you're going to do $500 a month. So you would transfer that in, and then you would set up your reoccurring buying, and you can go and turn it on or off at any point. Just checking to see if there's any questions so far. Now, for those of you that aren't based in Australia, the learning activity that we've provided you today, if this is something that you're interested in, is looking for maybe a local exchange that is in your area that offers this type of feature or service. So dollar cost averaging. So this is a good calculator to use to go in and see, okay, how much return of your investment. So this is saying if you would have started buying, and I put 2018 because that was the bear market. So if you would have started purchasing in the bear market, $100 every bi-weekly, I put here. So that would have been $50 a week if you would have been putting into Bitcoin. Over up until, I think I did it just to the other week when I was creating this slide, your total return on investment would be over 550%. And so it would have told you that your total value that you would have invested would have been 17,600. You would own one Bitcoin, and at the date that I took this, that would have been worth 114,000 US dollars. So it does pay to dollar cost average into sustainable assets. Now, this same strategy probably will not work for your meme coins or your degen coins, but for your stable, what we call blue chips, so your Bitcoin, your Ethereums, some people would even classify kind of like Solana and SWI. Dollar cost averaging into these assets is a really kind of good strategy for long-term gains. So compound interest. Who here has heard of the compound effect before? Just to put a yes or a no in the chat. All right, we got some yeses. All right, so I won't spend too much time on it. But the compound, compounding your interest basically allows you just to accumulate and keep reinvesting. Now, if any of you were on our DPIN call with Dominique from High Velo the other week, he was talking about every 90 days, because you can stake your High Velo tokens, and then but it basically finishes after every 90 days, but he was just taking that and reinvesting it and compounding his investment. So it allows you basically to kind of compound the interest, and that will vary depending on the different types of investments. I'm not an expert on teaching compound interest and different types of strategies, but it's just something that I like to bring to people's attention, especially with financial literacy. Not a lot of people know about compound interest, so it's great. A lot of the students that are already on this call, you guys are ahead of the game. But as a general rule of thumb, to see how long it will take you to double your savings, you can use the rule of 72. So you're supposed to divide 72 by the expected rate of return. So for example, if you were receiving a 5% annual on your savings, you would double your investment in about 14 years, which is quite a long time. And that's why a lot of people are looking for more lucrative investment opportunities in the Web3 space with staking and different kind of lending and yield protocols. We don't talk too much about the DeFi, but one of the courses that we will be bringing to you is going to be TradFi to DeFi by Finsightful, and they'll be talking a little bit more about the different opportunities in the DeFi space, which obviously can be a little bit more risky, but you get definitely a higher yield on your return compared to the traditional banking system. So compound interest is the fundamental component of understanding kind of wealth creation. Finsightful, I know we've mentioned them a few times, but they really focus, even though they talk about crypto trading and they have their automated crypto trading bots, they're all about wealth creation and about what's your plan for wealth. And they talk about, your super and your investment properties and your crypto. So it's a really kind of good program. If you haven't already kind of checked them out, I highly recommend that you go and do that. Understanding the power of compound interest can really make a difference over time in your economic independence. And this is like the essence of what Finsightful is all about. So if we take a little look at a simple example, just to quickly paint a picture for you, if you invested $10,000 annually at a 12% rate, each year you can either choose to be paid out that interest of $1,200, or you could keep reinvesting it. So what would you choose? Would you take out the $1,200, or would you continue to keep reinvesting it? So here is a little example if you were to keep investing it. So for example, over a 10-year period, if you were to take out your $1,200 at the end of every year, you would have earned $12,000 in interest over the 12 years, compared to if you kept reinvesting it, which is where that compound interest comes in, you would have got almost double, not double, but almost $21,000 in your investment. So in my opinion, if you can afford to keep compounding your investment, you just kind of keep doing that. Now, obviously, depending on what investments it is and what is your strategy and how secure it is, I probably wouldn't be compounding my investment in some of the altcoins, for example. But in particular assets, I would keep taking out that yield and reinvesting it. And a lot of the times in crypto, they might actually take out some of the yield, say from Bitcoin or from some of the altcoins, and then reinvest it into Bitcoin. So, I went a bit too fast. If you haven't heard of The Compound Effect by Darren Hardy, I highly recommend. It's a great book. I've included a little motivational video that he has, which is really great for mindset. There's also the audio version. If you haven't come across this book, I really recommend that you check it out. It's a really good read. It has nothing to do with cryptocurrency or trading crypto or investing in any way, shape, or form in the crypto space. It's just general kind of principles of understanding about wealth creation. So there's lots of different research that you can go and do. And I myself am even not an expert in these. I listen to a lot of different podcasts. Milk Road Radio is one of the ones that I listen to a lot. They talk about a lot of these topics, macro and micronomics. They talk about fiscal policies. They talk about the different cycles and inflations, quantitative easing. So I'm very familiar with all of these. I'm probably not the best educator on these topics because I'm not really an expert in them. But I highly recommend, if some of these terms are new for you and you don't understand them, go and do some research, and also check out the Milk Road podcast, because I think that they do a great job of talking about some of these topics. If anybody else has any other recommendations of books or podcasts that you listen to, please put them into the chats, or share them inside of the Education Hub, because that's really where that peer-to-peer learning comes in for us to share these different types of resources. So having the right investing mindset is so important. A lot of the people, when they get into crypto, they're looking to get crypto rich. I was one of them, in the start, because I was looking for ways to get out of hospitality and stop trading my time for money. And how could I, create financial security and then financial freedom? And you hear of all these people that become crypto millionaires, and you think that it's going to be just as easy. Well, it's not. So a lot of the times people don't make good decisions. Okay. So, first one, and we've said it before, never invest more than you're willing to lose. I don't feel sorry for people when I hear that they took out a mortgage on their house and then the crypto market crashed and they lost all of their money, because we as educators, we preach all the time, you should only be investing what you can afford to lose. Always make sure you do your research. We've got lots of different research activities for you to do so that you can understand. Make sure you're playing your own game. For example, last week, Renee showed you her trading style. Her trading style might not be for you. Maybe dollar cost averaging is not for you. So you need to figure out what is your style, what is your risk tolerance. Make your own rules, make your rules for taking profit. So there's always going to be a coulda, shoulda, woulda. This is the industry that we're in. Oh, if I didn't have sell, it could be worth this much. Oh, but then if you did sell and the market dropped, then you'd be happy with yourself. So you really need to make a plan, and then you need to be happy with it and leave the emotions at the door. So I often would, when it was altcoin season and I would sell my altcoins, I just wouldn't look again. I'm like, it's done. I've sold them. I don't want to know if it goes any higher. Because then, I might beat myself up. Then I'm like, oh, I should have held on to it. I should have sold. You've just got to make your plan. You got to focus on the bigger picture. And the most important thing is for you to find the right investing style for you and what fits your lifestyle. I am not a good trader. I'm too emotional for it. I have too much anxiety about it. I also am too busy. I'm not in, all of the crypto Twitter and all the different Discord groups and everything to be staying on top of the fundamentals. And I don't have the time to be looking and staring at the charts all day. So that's why I like to set up very easy dollar cost averaging and just set and forget it. But you also need to know when you can take profits. And you can set that up, for example, on Digital Surge and a lot of these other platforms like Bybit and everything. You can set it up that you're like, okay, great. I want to sell when it gets to this price. You don't have to be an active trader you don't have to be trading with leverage or anything to do that. You can do that with spot trading in all of these platforms. You can set it up in Bybit, be like, okay, great. I want to sell when it gets to this price. So it is kind of like a little bit of a set and forget. But the main thing is that you just need to make a plan, know your rules, and then stick to it. Okay. You cannot go broke taking profits. So it can be really exciting, but also very daunting for newcomers, for these new people that are entering in the space. So understanding the risk to versus reward is really quite important. So here's some key things. It can provide good returns, okay, but you can also, generally, the higher risk it is, the more opportunity you are to lose it, okay? So I don't generally invest in a lot of these. I used to, not anymore. When I very first got into the space, I FOMO'd in on like almost every altcoin, and I'm still holding on to those bags because I was like, oh yeah, the next cycle we're gonna. I know what I'm gonna do this time, because I didn't sell a lot of them because I had this fear that I was gonna sell them, and then that because everyone tells you that these projects are gonna be around long term. So this was, back in like 2020 or whatever the last cycle, 2021. And I'm still holding on to a lot of them. And now a lot of people are saying that they don't even know if we're going to have another altcoin season, because the market has shifted and it's more institutional money. And yes, it's more stable in terms of your Bitcoin and Ethereum, but now I'm left holding all these altcoin bags, which I've been hopeful. And I'm still hopeful that we will have an altcoin season and then I can get rid of those. But previously, I didn't have a plan to get rid of them. I did take some profits and I did sell some of them, but now I personally, the only ones that I would hold on to long term would be Bitcoin and Ethereum. And some of the other ones, like I mentioned, Solana and Sui are definitely getting up there, but Bitcoin and Ethereum, I don't actually know if I'll ever sell my Bitcoin and my Ethereum, or I might only sell portions of it. Already talked about only invest what you're willing to lose, and then being mentally prepared for the volatility. I don't even look at the daily prices very often. My friends, sometimes that's how I find out if the market has crashed or is gone up, because he'll message me and he'll be like, "Have you seen the price of Bitcoin?" And I know that's because he's really excited. Or he'll message me and he's like, "Oh, don't look at the market today." I just don't even bother looking. I have my plan of what I'm going to sell, and I know some of the top signals, that you need to be looking for, such as, what are the number one downloaded apps, so when Coinbase gets to the top of the downloaded apps, we know that retail's here. There's other different types of top signals that you can look out for. But that is my plan. And then I'm also going to dollar cost average out. I'm not going to sell everything at once, because I suffer from that fear and that FOMO. So for me, I'll be like, okay, I'm going to sell a little bit, sell a little bit. And I think Martin said that you had a dollar cost averaging strategy for getting out, which is very, very smart. Okay. Just checking. Yes, just some nice comments in there. So if you're unsure how to invest, I recommend that you reach out to a financial advisor, okay? But here's some tips for when doing your research. Diversify your risk with dollar cost averaging and have a diverse portfolio. And I also recommend that you don't keep all of your assets in one exchange. So I have some assets in Bybit, I have some assets in Digital Surge, I actually still have some assets in CoinSpot, because that was one that I bought, one of the very first exchanges I started using way, way, way back in the day. I also have some stored in my ledger, and I also have some stored in my Trezor. Okay, so that is diversifying my risk. Invest through regulated exchanges or professionals. So there's definitely different brokers for some people that don't want to actually have to kind of go through, like Caleb and Brown, for example, would be an example of a broker. If you don't really, I know people that generally these are people that are a little bit more in the, are more financially well off, and they're just like, okay, I have this amount of money. I don't want to deal with it. I don't want to have to do KYC. I don't want to have to go through all this process. I'm just going to give the broker the money and I'm going to tell them that they want to invest. Educate yourself and invest in your educating yourself on your investments. But everybody that is here and is doing this program, or if you're watching this recording, you are investing in your education, and that is one of the important things that you can do. We recommend that you own your own assets. We've talked about this previously, so not your keys, not your crypto. So we don't recommend that you keep your money long-term on exchanges. So obviously, if you're a day trader, or if you're actively trading, then you would keep a certain amount of money on there for you to be trading. But we don't recommend that you keep it on there long-term. Even though I would say exchanges are becoming safer than they were years ago, there's plenty of stories. Go and watch Trust No One on Netflix. There's the Mount Gox, go and watch some of these documentaries. These are the early days, but we still had FTX happen just back in 2021. So was it 2021? No, it was 2022, I think. Gosh, the years are starting to blend together. But so we do recommend that you take your assets and be the owner of your own bank, okay, and secure those private keys. Ignore the noise and don't fall for the FOMO. I was a very, very big victim of this, or not victim. I guess that's the wrong word. I can't think of the right word. But no worries, Lynn. Thank you. Have a good evening. Oh, I forgot to change my name. Thank you, Lynn. I just realized I didn't rename myself. I am just one of those people that I'm afraid that I'm going to miss out. So I constantly fall for FOMO. Tracking your results. Now, I know Renee's going to go through this next week with those active traders and having a trading journal. Well, you can do the same thing. Okay, this is when I invested. This is when I'm planning on taking money out. Now, when I very first got started, I was like using different types of Excel spreadsheets. Now I have like Sila, which is a software that I use. It's actually a crypto tax accounting software. I can see all of my assets there. I can see kind of like the overall growth of my assets. There are different platforms that you can use. CoinMarketCap has like a basic free one that you can use. I had a call with a really good company the other day called CoinStats. I'm not sure if anyone's heard of CoinStats. We're going to be looking at doing some things with them because they're really around a lot of educational pieces after Token 49 when I get back. But go and check out their platform. I haven't dived deep into their platform, but from the bit of research that I did, it looked really good. So it's a good way of tracking your results. Make sure you're always taking those rules for taking profits. And always, please be very careful of scammers, okay? You can never be too careful. I'll tell you a little story. The other day, I had a call booked, and I sent them my link. They booked a call, which books with Google Meets, and a minute before the call, she sends through and says, hey, can we use Zoom? I'm having an issue with this Google Meets. And I had seen this post online that what some of the scammers are doing is they'll send through like a real Zoom link, and then so you'll see it looks like it's real, and then they were like editing the link or something so that when you downloaded it, it was like put some sort of virus or something on your computer. So I said to her, yeah, Zoom, no problem. If you don't mind, I'm going to send you a Zoom link. And I sent her a Zoom link, and I jumped on the call and I said, I'm sorry, no, nothing against you. You can just never be too careful. So in this industry particularly, but in this digital economy, you just got to be very careful. They're getting so savvy on the way that they're scamming people. Roseanne uses CoinStats, pretty good, but still a bit lacking NFT tracking. Okay, well, good. That's great feedback. Thank you, because yeah, I haven't dived into that. Hey, maybe Roseanne, if you can, maybe just share the link in the chat for anybody that might want to check it out. All right, so we've talked about dollar cost averaging. We've talked about, having the right investment mindset. But what about for those of you that want to maybe transition a career into the Web3 space? Well, I'm going to give you 5 keys, my 5 keys to success in Web3. And these are the things that I did that worked for me. It doesn't necessarily mean that they're going to work for you. And there's lots of other different things that you can do. But these are just my 5 key ways that you can be successful in the Web3 space. Oh, going the wrong way. So develop a solid fundamental understanding of the fundamentals, which you are doing. Okay, everybody that is here and been turning up every single week, you are developing a solid understanding of the fundamentals. It will take time, okay, but you need to understand the language, the terminology, so that you can really, you don't need to be an expert, okay? And even nowadays, a lot of these Web3 companies are hiring people that don't have very much experience in the Web3 space, but it's definitely going to help you, even if you have transferable skills. And this is some of the things that we actually talk about in our mentorship program. We look at your transferable skills. We look at things that maybe you enjoy doing. What are the different types of verticals that you can go down? But it's really good to have a solid understanding of all of the fundamentals. I keep going the wrong way. Participate in the community. So this is probably one of, I probably should have this as number one, because I think this is probably one of the more important ones, is being active. So turning up. Wherever you are locally, I'm pretty sure if you go onto Meetup or go into Luma, these are two very popular platforms, okay? Even Eventbrite, but I would say Meetup and Luma are probably the two most popular. Find, a local meetup or group in your area and tap into that community. Tap into communities online. If there's a chain that you like, if you like Chain, go and join their Discord, join Telegram groups, get in there, be active. It's a really good way to build a career in the Web3 space. I can't tell you, I can't remember the last time I actually applied for a job and got a job in the Web3 space. I think there was at one point when I was transitioning, when I left a private RTO before I went back to TAFE Queensland, I did apply from for a couple of roles, but I never even heard back from them. Majority of my roles always come from meeting people, reaching out to my network, saying, hey, I'm looking for opportunities. When I went to my very first overseas conference, Token 49, in April of 2023, I went there with an intention to find an opportunity for a job, and I found one. I ended up getting a job with a consultancy, and it was a contract, and I worked for that consultancy based in Dubai for about 4 months. So, but I made the intention of being active and turning up to these conferences to, I keep going the wrong way. If anyone is on the Sunshine Coast, send me a message. I can let you know the next Sunshine Coast meetup. Yeah, I'm so happy that they started doing those again. I know that there were some guys that were doing some meetups there for a while, and then it kind of faded off. And then I've seen that they recently started them back up. All right, collaborating, working together. I see that some of you are doing that in the Education Hub. You can see that a lot of these communities, so we've got all things blockchain, Evolver, Janif, Insightful, we're all collaborating to come together to pool our resources and our to help the community spread awareness, because we have one goal, and that's just helping and onboarding people. But especially when it comes to learning, sharing, maybe you see a job. I know a couple of people that are looking for job opportunities, and when I come across them, or if I see somebody post in a group, I share, and that's all about just working together and collaborating. And lastly, develop a specialized skill set. So once you've kind of got an understanding of the fundamentals, and maybe you want to specialize in DeFi, maybe you want to specialize in trading crypto, maybe you want to specialize in the policy, regulation and policy, maybe you want to specialize in compliance. So there's different types. Maybe you want to become a developer. And then even with the developer, you can get even more niche where you could specialize in smart contracts on Ethereum, or you could learn how to be building on Solana. So I really recommend that you kind of, in the beginning, obviously figure out, what you like, what do you enjoy learning, what rabbit holes do you want to go down. But a lot of the times, to kind of get kind of good paying roles in the Web3 space, they want you to be experienced in a particular skill set. So that doesn't necessarily mean that it needs to be Web3. We talk about this a lot, as I said, in some of our workshops, where a lot of companies will look at your current skill sets, what we call transferable skill sets, because all Web3 businesses need all the same skill sets as Web2. So a lot of the times they are happy to onboard somebody as long as they're willing to learn about the Web3. Now, obviously, the more knowledge that you have, the more attractive that's going to make you as an applicant. Be flexible and adaptable. It's a massive learning curve. I actually had a call with one of my interns today, and she has, she's finished her internship with me, and we've actually got her on some contract work. That's also another way that you can really kind of get involved into the space, by putting your hand up in volunteer roles, doing internship programs. And then we've now brought her on and offering her some paid work when we have different types of contracts. But she's been very adaptable and flexible. She understands that we're a startup. Also, you have to be willing and flexible to learning new things. She was telling me about this internship opportunity that she's now has with this consultancy based in Dubai, and how it's completely different, and she's having to adapt and kind of learn, because she's been learning with me for the last 4 months, and now she's learning this completely different environment. Even though she was able to take a lot of the learnings that she's obtained from doing her internship with us, you have to be very flexible and adaptable. And this industry is continuously evolving. And depending on what type of job, if you are looking to get build a career in the Web3 space or transition, a lot of these startups, you have to be very adaptable and be very flexible. Sometimes when you get into bigger, larger kind of organizations or big, huge tier one exchanges, they operate very much kind of like large kind of institutional or corporate companies. But in a lot of these startups, they don't. And that's not for everyone. I worked years ago for a registered training organization that was bringing in the diploma of applied blockchain, and they weren't a new RTO. It was a long-standing RTO, but these guys that had purchased the RTO were new to this industry, and they were trying to change the systems and the processes, and you constantly pivot and you have to be very agile. And this particular person came from working at universities that had very kind of set systems and processes that had been built out over years and years in time, and it just wasn't the right environment for her. So if you are going to go down and think about working for a startup, you really need to be flexible and adaptable. All right, so how to get a job in Web3? Well, all of those things that I've just posted or just talked about, sorry. But there are being very active in the community is one. And also there are different types of, there's different websites and stuff that you can go to. There's different types of groups on Telegram that you can, and if anybody's interested in those, please send me a DM. I've got a couple that I can share with you. But my number one is just get out there, get active, get participating. I know of one story as in Melbourne a couple of years ago, and I was on a panel, and this guy came up to me and he said, "Oh, I really enjoyed your conversation, and we got talking, and I said, oh, what brought you here? Like, how did you end up at this? It was the Blockchain Australia conference, which was a bit more institutional. And he was like, oh, I follow the XDC, I'm in their Discord. And then I went and told one of the XDC team about this particular student. Well, this person then became a student studying the advanced diploma of applied blockchain. And then that brought, by me speaking about him, I think that ended up him getting an opportunity to be a moderator in the group. And then I think he ended up kind of working and doing some contract work with them. So what I'm basically trying to say is just get involved, be active in the community, network, 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 network. That is the best way I can recommend to get a job in the Web3 space. And be persistent. It's a new industry, it's growing, it's not necessarily as easy as it is maybe in some of the other industries when you kind of, you get a degree and then you go and get a job in that space. It's not that easy, in my opinion. A lot of it comes from you building your network and spending time inside of the community. And just looking for questions if any are popping up. So relatively shorter lesson for our last lesson today. Now, as always, you've got your practical activity, okay, where you're going to go in and look at some dollar cost averaging options. What are the best ones for you? What type of methods? Doing some reflection on kind of, your investing mindset. What type of investor are you? What's your strategy, etc. And as I mentioned, I shared this video here by Darren Hardy. I think it's a really good listen because he really kind of just talks, it's just about overall mindset and wealth creation, and also the compound effect of the book. I highly recommend it. I got a lot of value out of listening to it myself. And as always, you've got your quiz that you can do, which will get you points. And speaking about points, we're going to jump into the group in just a moment. Aside from looking at most downloadable apps, what are other signals you look out for to decide when to sell? I look out for when the market, like everybody is just talking about. I listen to podcasts, so the Milk Road, I cannot speak today. Milk Road. I listen to that podcast quite frequently because they talk a lot about what's happening. I keep an eye out for a lot of retail, well, generally this cycle is a little bit different, right? Because we haven't had an altcoin or a blow off top yet. But the best way is to tuning in regularly, finding a podcast that talks about a lot of these signals, and just follow along the advice of these people. Because also, Ben from Collective Shift, if you haven't heard about him, these people have research teams that are constantly day in and day out researching the macro and microeconomics of the platform, registering for newsletters. These are the different types of things that I would be doing. Okay, before we wrap it up for today, I'm just going to jump into the group for a moment. Martin says, I have found that my investing plan changes and evolves over time. For example, investing in the market low, I was hammered by banking on on-ramping limitations. So my plan reflection that limitation. My dollar cost averaging out is focused on altcoins only. Yeah, definitely good to always have a different plan. Also finding a bank that's crypto friendly. I had a friend tell me that they had to change their bank again because they got debanked. I use ING Direct and I have never had any issues. I actually started using ING Direct after I read, well, I say read, I listened because I'm an audiobook. The Barefoot Investor. Actually, I do think I have a copy of it as well. I think I read and listened to it. If you haven't heard of The Barefoot Investor, highly recommend it. But I switched to ING back then because you can take out money anywhere with your debit, internationally, globally. Like, I do not care about taking out money anywhere because they don't charge fees, and they actually have higher interest rates. And I've never had any issues with them blocking any type of transactions. All right. Am I sharing my screen? I am. Okay, great. So, leaderboard. Barefoot Investor has traditionally hated crypto, but yes, he did. Yeah, I don't know. I think it's been so long. I think I actually read that book before I got into crypto, but the years just start to blend in together. All right, so here's the leaderboard. At the moment, we've got David, D, and Nick, okay, as the top three. Margaret trailing just by a few behind. Roseanne, Logan, Lynn, Michael, all of you, Sandra, you still all have an opportunity to catch up. The race is not over. I will be sending out an email, okay, later this week with a reminder of everyone. I will be sending it out. The feedback form is at the bottom of the emails that we've been sending out every week, but I will be sending out an email with your deadlines of finishing all of your quizzes, getting in your forms, and what day we'll be announcing the winners for the boot camp. As always, you can find your recordings. I always pop the recording in the morning, but you've already got your access to all of your links here, so you can access the slides, the learning resource, and the quiz. And you've got your recordings in here that I populate. And then if anybody wants the PDF versions, I do upload the PDF versions of the slides and the learning resources to these drives here for you. All right, anyone, that I know is a little bit of a shorter lesson today, but that is it. That it comes to the end of our 8 weeks with me. You do still have your last session with Renee on Wednesday, so please tune into that. Keep your eyes and ears open for that last email and those deadlines for you. I was actually thinking about that today. I'll probably work on it tomorrow, but we'll probably give you till the end of next week for everybody to catch up, do their quizzes, and we will announce. So we'll give you probably to the end of, oh no, I want to do the announcements before I go away. When does everybody think's a fair time, actually? Let's get a consensus on this. How much time do we think? Should we give everybody maybe until Wednesday and then announce the winners on Friday, the 26th? Does that sound good? Give everybody some time to maybe finish up their last minute quizzes. Is that fair? Okay. All right. Well, yeah, okay, cool. We'll do that. I'll put that in the email. Deadline cutoff is going to be Wednesday, the 24th, which gives you 1 week from the last lesson. And then we will announce the winners on the Friday, the 26th, which is good because I fly out to Singapore on the 28th. So I want to get that off. But good, awesome. Thank you so much, Roseanne. Really appreciate all of you that have turned up. I know it was a big ask turning up every single week. It was a bit of a, a pilot program for us running this boot camp. As I mentioned, we will be turning these into on-demand short courses. So once those are in there, that's my plan in October, is to, when I get back from Token, take all of these materials, quizzes, lessons, everything. We'll put them into the learning platform. So if you come across anybody that is new to crypto and doesn't know where to start, you can just invite them to join the education hub. And as I said, we're going to be working with Insightful to be adding in your TradFi to DeFi course. So we'll have some more courses. We're actually in talks with some other sponsors to be funding, because we're trying to make all of this education free and accessible for everyone. So we rely on sponsors, and we are having a conversation with a few other sponsors. So definitely more programs coming your way. But thank you, everybody. I hope that you got value out of it. Please keep recommending as you come across new people. For those of you that I won't see at the next Brisbane meetup or at Token 49, please don't be shy. Always reach out to me. Always, you can send me a DM on LinkedIn, send me an email, or I'm very active on Telegram as well. I'm always here to help and support you. And that's it, everyone, for tonight. Enjoy the rest of your evening, and keep an eye out for the email for the winners. Thank you, Martin and Margaret, for being awesome students. Good. I'm glad that you enjoyed it and you got value from it. And I'll see you when I get back from Token. October 7th is the next meetup. All right, everyone. Have a good night.